Good morning, all of you. Good morning.
Good morning, ma'am.
Yes, good morning. Just a minute.
Okay.
Uh, shall we start? Before they make me a host, I'll just would like. Huh? What happened? Sivu? Sivu? Yes. In our previous class, we discussed about partnership accounts, right? Introduction, the provisions of partnership to be followed in absence of partnership agreement. Generally, if partnership agreement is not there, as per the Partnership Act, provisions of Partnership Act the provisions has to be followed in relation to profit sharing ratio, interest on capital and drawings, salary commission, and loan to interest. Let us see about those. In absence of partnership deed, if the partners does not have any written agreement, then as per the Partnership Act provisions, whatever there, they are supposed to follow. First one is profit and loss. Profits and losses of partners to be shared equally. Second, no partner will be paid any interest on capital. At the same time, will be charged any interest on drawings. That means no interest on capital, no interest on drawings. Fourth one, no salary and commission to partners. Fifth one,
Ma'am, which unit?
Ma'am, are you sharing your screen?
no, I'm just recalling our previous topic. Okay. I'm waiting for the university to make me host to share.
Can I know
Block,
the page number of the book?
block two. Block two, I started with the partnership accounts. In our previous class, we discussed about partnership accounts, introduction, final accounts. And now, today's class, I'm going to start with the admission of a partnership. That is block three. Block three, admission of a partner. Uh, we are going to work out in our today's class. Block three. So before we start the block three, I'm just recalling our previous knowledge, what we discussed, the main topics which helps while doing this admission and retirement of partners. That is provision. See, in the partners, if there is no agreement, what is the profit and losses sharing by the partners is not given means you should take equally. Profits and losses to be shared among the partners equally. The second thing, no partner will be paid capital, interest on capital, and charged interest on drawing. That means no interest on capital, no interest on drawings. Fourth point, no salary and commission to any partner. Fifth point, if a firm takes loan from the partner, upon that loan amount, the firm pays 6% on loan. 6% interest on loan per annum. So these points you are supposed to remember while doing admission of a partner or retirement, or that means partnership accounts. While doing partnership accounts, these are important to remember relating to the partnership accounts. Now I'm going to talk about today's topic, admission of a partner. Here is the share. One second. Admission of a partner, my PPT. And it's showing the same. Generally, admission of a partnership form involves four steps. Means in the business, if any partner is admitted, that is called admission of a partner. So when a new partner is admitted into the partnership form, then the partnership accounts partner has to do certain adjustments relating to their books. Okay, so accounting treatment at the time of admission of a partner we are discussing here. Please do pay attention. Don't involve in discussing or charting. First, pay attention to the class. Then we'll discuss if any doubts at the end of the class. I'll give you 5 minutes time. I'll repeat once again. Admission of a partner is one of the important topic from the examination point of view also in the partnership accounts, from the partnership accounts. So when you are asked to prepare partnership accounts, when a new partner is admitted, so accounting treatment involves, that is say A, B, C partners and they want to admit a D, new partner. Then their profit sharing ratios changes. Okay, and when the profit sharing ratio changes means when the new one is coming, the existing ones has to sacrifice some of their ratio. And next, whatever till the date, whatever the assets and liabilities are there, new partner, old partner is responsible for that. And after the admission of the new partner, the whatever new values based on that, he will become responsible. Okay, so any profits left over that are to be right of sharing those profits will be with the old partners only, right? So all so many adjustments required to be made when a new partner is admitted. So from the academic point of view, when you are asked to prepare the new partner is admitted, these are the requirements you are supposed to provide. Like first, you need to calculate sharing ratio and sacrificing ratio. The next, valuation and adjustment of goodwill. Third step. The fourth step is preparation of revaluation account. Then fifth step is distribution of accumulated profits. And the sixth one is adjustment of partners' capital accounts. Last, new balance sheet. You will prepare new balance sheet. Okay. So in the question, you will be provided with a, I'll explain you all. In the question, you will be provided a balance sheet of old partners and some additional information. So from the given balance sheet of old partners and additional information, you are supposed to prepare this. What are those? You are supposed, most of the situations, new profit sharing ratio will be given, or a simple way you will have. The next, calculating the sacrificing ratio. The next, adjustment of goodwill and preparation of revaluation. So these first three steps in a working notes you will get. Fourth step is a account, revaluation account you will open. Fifth step, adjustment of partners. While preparing the partner capital account, this whatever accumulated profits are there, that we will show. Okay. The next, so three accounts you will open. One, revaluation account. Two, partners capital account. Three, statement, balance, new balance sheet after the admission of a new partner. Remember children, when admission of a partner question is given, in the question you will be given a balance sheet and some additional information. So from that, you are supposed to prepare revaluation account, partners capital account and new balance sheet after admission of the partner. And before doing all these three, you are supposed to do some working notes that with regard to the calculation of new profit sharing ratio and sacrificing ratio and calculation of goodwill. Okay, these are three you are supposed to do in the notes. Now let us see the new profit sharing ratio methods. There are three methods in calculating new profit sharing ratio. Among those three methods, the first method you will get most of the questions. The next, sacrificing ratio. Sacrificing means when a new partner is joining, old partners are sacrificing some percentage of their profit. So how do you get the sacrificing share? Old profit share minus new profit share of the partner. Now look into the new profit sharing ratio method. First one is, see with the example, these methods have no names. I'm repeating again, these methods have no names. They are just based on the how you calculate the new profit sharing ratio. We have three methods. Look at here. In the question, you will be given A and B are partners sharing profits in the ratio of 3:2. They admitted C as a new partner to share in the future profits of the firm. Calculate new profit sharing. So generally, in the question, these will be given to you. Like A and B are partners sharing profits and losses in 3:2 or 2:3 or 4:5, somewhat will be given to you. And new partner is admitted with 1/5 share, 1/3 share, 4/5 share will. So when this kind of lines you find in the question, how do you calculate the new profit sharing ratio? Let us see that. So when this type of question is given, means these wordings or these sentences are given, then first you should assume the total share of the partners is of the firm is 1. So from the total share of the firm, 1, if a C has been, that means new partner has been given some share, means, say what is the share given to him? 1/5. So from the total share 1, subtract the 1/5 of share. Means 1 by 1 minus 1 by 5. 1 by 1 minus 1 by 5. Okay. How you got 1 by 1 here? 1 by 1 means when you are you are subtracting, converting the 1 also into fraction. So 1 by 1 minus 1 by 5. So LCM, you will get 5. Okay. Get 4 by 5. This is the remaining share. Others, please. So 4 by 5 you will get. Okay. So 4 by 5 is the remaining share. So this remaining share we distribute to new old partners. So how do you get new profit sharing ratio? Old share into remaining share. So A's old share is how much? 3. 3 by 5. How you got this 5? Because if you add A is 3 and B is 2. Total share 3 plus 2, 5. Right? So out of the 5 units, 3 units A is taking, 2 units B is taking. That is how it is 3 by 5 for A. 3 by 5 into 4 by 5. What is the remaining share you got here? If you do 3 by 5 into 4 by 5, 3 into 4, 12. 5 into 5, 25. So 12 by 25 is the A's new share. Now let us calculate B's new share. How B is getting? B share is 2. That means 2 units of total 5. That means B share is 2 by 5 old into new remaining share 4 by 5. 2 by 5 into 4 by 5. So 2 into 4, 8. 5 into 5, 25. So 8 by 25. B's share is 8 by 25. So A 12 by 25. B 8 by 25. That means how C is getting, what is the C share? 1 by 5. In order to convert, so A 12 by 25, B 8 by 25, C 1 by 5. So in order to convert C also, means to make equal fraction, C also we convert into the equal fraction. That is, what is the denominator for A and B? 25. So can we convert C also to 25? Yes, we can convert 5 multiply with the 5 on numerator and denominator. So 1 into 5, 5 into 5 is the next one. So you will get a 5 by 25. So C share is 5 by 25. If you convert that into ratio 12 is to 8 is to 5. That is the new profit sharing ratio of A, B, C. Here in this sacrificing ratio. See children, remember when you are being provided this simple information in the question, the old ratio itself becomes sacrificing ratio. Because if we calculate, so how and what, as we have a limited time span, I just give you as a like a tip. Remember, when this simple sentence you will get, the old ratio itself becomes the sacrificing ratio. That much you remember. Now, this is the most important method, which mostly in most of the questions you will get in the admission of a partner or retirement. The next second method is like this, and these methods, the other second and third methods, helpful for you in attempting short answers. Okay, in essay questions, long answer, this will be given very less, but let us know about this. Look at this sentence formation. AB are partners sharing profits in the ratio of 3:2. C is admitted. And how C is getting his share? C is getting total 3/10 of share, out of which 2/10 from A, 1/10 from B. This is what given to you. When these kind of sentences you will find in the question, remember, I'll show you how to do new profit sharing ratio. Again, I repeat, in this question, how it was given, look carefully. AB partners sharing in profit ratio 3:2, and they admitted C, and C is getting total 3/10 of share, out of which is getting 2/10 from A and 1/10 from B. Okay, when you find these kind of lines, you are supposed to calculate new ratio, new profit sharing ratio in this method. Look at it. C is getting total how much? 2/10 from A and 1/10 from B. Okay, so let us calculate. Means A is sacrificing 2/10 and B is giving, not sacrificing, giving 1/10. New share. How you get a whole share minus sacrifice share? So now let us calculate A's new share. A's whole share is how much? 3/5. How? See, A and B ratio is 3:2. That means 3/5 is the old ratio. Okay, A's old ratio is 3/5. And sacrifice share. How much A is sacrificing to C? 2/10. 3/5 minus 2/10. So convert into equal fractions and do LCM. You will get A's new share 4/10. Next, B's new share. What is B's whole share? 3:2. 2/5. So 2/5 whole share minus sacrifice share. How much share B sacrificed to C? 1/10 of share. So 1/10. Again, if you do convert into equal fraction and do LCM, you will get B's new share 3/10. In that case, A and B, C new profit sharing ratio is 4/10 is to 3/10 is to 3/10. C also 3/10. Because for all the three, denominator is 10 only. And remove the denominator. After removing only numerators, if you take, new profit ratio of ABC is 4:3:3. I'll tell you what is numerator and what is denominator. The upper part of the division means if fraction, if in this fraction, the upper part we call as the numerator, the lower part we call as the denominator. These are basic fraction related terms and fraction related calculations. I hope you all know. Now, so this is second method. So remember, when the lines are given like this, You are supposed to do what? Directly from the whole share, the given share in the question of each partner has to be subtracted. Remember, children, this when in the world, when the sentences are like this in the question, how to calculate new share? Old share minus sacrificing share. No, directly subtract the sacrificing share from the old share. Subtraction. Here in second method, subtraction. Okay. Now third method. Third method is what? Look at the lines. X and Y are partners in a firm, sharing profits in the ratio of 3:2, and admitted Z as new partner. X surrenders 1/4 of share and Y 1/3 of his share. Means a fraction of share they are giving. Look at that. Surrenders 1/4 of his share and Y 1/3 of his share in favor of Z. So here they are surrendering fraction of their profit share. Right? Now how to calculate? Here one multiplication, one minus you will have. Okay, one multiplication, one minus. First, you are supposed to calculate sacrificing share. Then you are supposed to calculate new share. Okay, so now let us see. What is X whole share? 3/5. And Y whole share is 2/5. Z is getting 3/20th share from the X and 2/15th of fraction of share from the Y. Right? So first you need to calculate sacrificing share of X. How sacrifice, what is the X sacrificing share? Old share into fraction shared to new partner. So old share 3/5 into how much he shared to partner X 1/4. His 1/4, right? 1/4. So 3/5 into 1/4. As you are doing multiplication, numerators and denominators individually multiply. So 3 into 1, 3. 5 into 4, 20. So X sacrificed share is 3/20. Now, X new share. How do you get X new share? Old share minus sacrificed share. So old share is 3/5 and the share sacrificed is 3/20. So 3/5 minus 3/20. When you are minusing or subtracting, you need to do LCM. I'll repeat once again. When two fractions, 3/5 and 1/4, these are two fractions. When two fractions you are doing multiplication, numerators you multiply and denominators you multiply, take directly. But when you are doing two fractions, either addition or subtraction, you need to do the LCM. LCM you need to do and calculate. So when you do 3/5 minus 3/20, the final answer you are getting 9/20. Okay. Now similarly for Y. Y is sacrificing how much? Y whole share is 2/5. We already given in the question. And what is the share? What is his fraction of share to Z? See, Y 1/3 of his share to Z. So 2/5 into 1/3. So 2 into 1, 2. 5 into 3, 15. 2/15th share is sacrificed. Now Y new share is 2/5 old minus sacrifice share 2/15 minus so do LCM, you will get final answer 4/15. Now Z share. Z is getting 3/20 from A, that is X, and 2/15 from Y. Again, here plus sign is there. So convert these denominators into equal fraction and do LCM. You will get a 17/60. So in that way, X share, X, Y, Z shares are 9/20 is to 4/50 is to 17/60. Then what happened? For each of them, numerators are different. So convert these denominators into equal fraction. Then if after conversion, you will get XY share as 27 is to 16 is to 17. So this is about what you call calculation of new profit sharing ratio and the sacrificing ratio. But majority of the times in the examination, you will get the first method only. First method is that I take total share as 1 and minus the new partner share. Whatever you get, that is called remaining share. Multiply the remaining share with the old share. Then you will get a new share. Understood? Once you get a new share, minus old share minus new share, if you do, you will get sacrificing share. This is about the new profit sharing ratio. The other adjustment is that goodwill. One second. Goodwill related adjustment, again different there. Valuation of goodwill, different methods. The second adjustment, while we do partnership accounts admission of a partnership, the next one is valuation of goodwill. This valuation of goodwill, upon this, you can expect short answers also. Children, I'm telling you again, this valuation of goodwill, you will get in short answers also. In long answer, under the partnership admission of a partner's firm accounts, you will get a bit of that. Okay. So as you can expect this valuation of goodwill under the short answers also, I'm explaining you here in detail. Okay. So first, before we get into the question topic, let us understand what is goodwill. What is a goodwill? Goodwill in generally we say is a reputation of the firm. Goodwill is a reputation of the firm or a monetary value which advantages the company or which brings the company, that we call as a goodwill. So goodwill means just with the name of the company able to make a profits. So that's a reputation, whatever we is goodwill. So generally this goodwill is intangible, means we can't see this asset, but just by name the company is making profits. So that is goodwill in simple terms. Okay, reputation of the firm in respect of profits expected in the future or over and above the normal profits, we call as a goodwill. Okay, and we also can say goodwill means a present value of firm's anticipated excess earnings, means based on the future expectations, whatever the company is going to earn, that we call as a goodwill. So when we get the goodwill, only when a firm able to make the profits, we will have, a company will have a goodwill, and that is a super profits. When company able to make or earn super profits, then only that firm will have a goodwill. What does mean by super profits? Means actually, see, a business is there. A business on an average every year is making a 10,000 profit. Okay, and now this business expected in next year we are going to make 12,000 profit. If actual profit, so 1 year, so I'll repeat once again what is super profits just for your understanding. Okay, super profit means, through example I'll explain. See, you are running a business. Your business, you expected generally every year you are making some around 10,000 business. But will you go blindly like that? You will target, right? So this year in 20, you targeted in by the end of the 2020, I should make a profits of my annual profits are 10,000, but in 2020 ending, I should make a profits of 12,000. Okay, done. 2020 ending came. So what your expected profit? 12,000. And actual profit, 2020 year ending came, you calculated, you found your profit and you made a 15,000 profit. So that means your actual profit is more than your expected profit. So that is your super profit. Understood? Okay. So for example, in 2020 ending, you made a 10,000 only, like as usual. but your expected profit is 12,000, your actual profit is 10,000. Then there is no goodwill and there no super profit. When we get a super profit, when expect actual profits are more than the expected profit, then you'll get a super profit. So when company earns such super profits, automatically company will possess goodwill. Okay. So when company gets losses, there is no goodwill. Now, what are the factors? This all for the theoretical aspect. I hope you all can prepare. For other classes, I prepared that. When goodwill is need to be valued, change in the profit sharing ratio when your partner admits, a partner retires, death, dissolution, amalgamation. So methods. This is important for us here for the accounting purpose. So there are three methods of calculating or valuation of goodwill: average profits method, super profits method, and capitalization method. So goodwill is valued under three methods. Okay. Goodwill is valued under three methods, that is average profit method, super profit method, and capitalization method. So these three methods you can expect not only in your admission, also short answers. Under short answers also valuation of goodwill questions you can expect. That's the reason why I'm explaining you here about the goodwill valuation. So look at first, let us understand the average profit method. How do we do average profit method? See, the first question, how it appears in the question, let us see. In the question, you will be given profits for some 4 years, 5 years, 6 years, it can be. Generally, at the max, 5 years will be given. So you will be given profits for some 5 years and will be asked, see, this line will be here. Calculate the goodwill on the firm on the basis of 3 years purchase of 5 years average profits. Means out of the 5 years profits, a 3 years purchase of average profits, goodwill will be. So when you find these lines, a goodwill to be calculated on the basis of 3 years purchase of 5 years average profits, you're supposed to, and in the question you have been provided 5 years. So how do you calculate? First, you need to calculate average profit. How do you calculate average profit? Total profits for the of the years given divided by number of years. Say how many years are given here? 1, 2, 3, 4, 5. 5 years. And what is the total of all these 5 years profits? See, 50,000 plus 70, 1,20,000 plus 80, 2 lakhs plus 50, 2,50,000. Right? So 50 years is 60,000 given in the brackets. That means it is loss. Out of 5 years profit, 1 year is loss. So add all the 4 years and subtract the loss year. So 2,50,000 minus 60 means 1,90,000. By 5 you take. By 5 if you take, you will get, it is 70. By 5. Number of years given are 5. So by 5. Even if it is 1 year is loss or 2 years loss, you should take all the years given. Loss also to be included. Okay. So 5 years are given, 1 year is loss, but while dividing 5 years only you should take. Okay. So what is the average profit we got? 36,000. Now, how we asked you to calculate on 3 years purchase of the average profit. So average profit is 36,000 into 3, number of years purchase 3. So goodwill of the firm is 1,08,000. So whatever the amount you got, that is the goodwill of entire firm. Goodwill of entire firm. In this goodwill of entire firm, you are supposed to calculate new partner share. Whatever the new partner share of goodwill is that has to be calculated. Okay. This is the first method. So after that, sorry children, average profit method, you will be given profits for 5 years or 3 years like that, and number of years purchase will be given. You are supposed to find first average profit. How do you get the average profit? Add all the years of profits given divided by number of years. If any year given loss, that has to be subtracted. After that, then you will get the average profit. That average profit multiply with the number of years purchased here. Okay, you will get a goodwill of the firm. Goodwill of the firm. The second method, super profit method. Super profit method means generally in the question you will be given capital of the firm and capital of the firm, then normal rate of earning on the capital, annual profit during that year, and number of years purchased. This information will be given to you. I'll repeat once again. Capital of the firm is important. Then normal rate of returning is important. Then expected profit or actual profit earned by the firm is important. This anyway will be given. Then how to do? I said super profits means what? Actual profit minus expected profit. Okay. So actual profit is what? This is. How do you get the expected profit? So actually by calculating this, concluded that the normal rate of return is 15%. That means on the capital, you calculate the 15%. That's going to be the expected profit. Okay. Now let us see. First, you are supposed to find out normal rate of return amount. Means with the experience, on an average, 15% of capital is rate of return we get upon the capital. That is what they calculated. So take the capital employed into normal rate of return. Both will be given to you in the question. So what is that amount? 45,000. Now, how you get the super? So this is the normal rate of return or expected profit. Now, how do you get this super profit, average profit minus actual profit? So 50,000 minus 40. This is 52,000. Printing mistake. 52,000 minus 45,000. Then you will get 7,000. So goodwill of the firm again 7,000 into number of years purchased 3 he said. So number of years purchased 3. 7,000 into 3, 21,000. That's how you get it. Okay. Okay. I'll repeat once again. When you are given capital of the firm, normal rate of return, and actual profit earned, how do you get? First, calculate normal rate of capital return. Return on the capital 2 lakhs into 15%. Then actual profit, you will get normal rate of return. Super profit, find out the super profit. Super profit, average actual profit minus average profit. Then you will get super profit. Once you get the super profit, multiply with the number of years purchase, you will get a goodwill of the firm. You under the valuation of goodwill methods, whatever the goodwill you will get, that is goodwill of the firm. From the total of goodwill of the firm, you are supposed to find the goodwill of the new partner or retiring partner, like that, if you are supposed to. Okay. Next one is capitalization method. Under this two you have average profit method and normal super profit method. Again in the question you will be given, means a combination of above two will be given. Normal rate, total assets worth, and will be given to you. Or based on this you will be asked to calculate the goodwill. First, you need to find out capital employed. How do you get the capital employed? See, total assets are given, including goodwill, and outsider liabilities are also given. So, how do you get the capital employed? total assets minus outsider liabilities. If you do, you will get capital employed. But total assets are included with the goodwill, so subtract the goodwill from the total assets first. So the total capital employed is this. Upon the capital employed, calculate the normal rate of return. Okay, you will get. So then capital required minus actual capital employed. If you do, you'll get goodwill of the firm. This is called capitalization method. The next one is super profit method. Again, average profit minus actual profit minus average profit. So if you do, you will get a same capital employed into rate of return. Only the thing is here normal rate of 100 by normal rate of return, you will take a goodwill of the firm. Rest all remain same. Now let us see a revaluation account. I'll show you revaluation account. That also I prepared actually. Yeah. The third step means in working notes, you will calculate new profit sharing ratio, sacrificing ratio, and goodwill, depending on the question. Okay. After doing these working notes, you will proceed with the preparation and opening of revaluation account. Revaluation account, partners capital account, and new balance sheet after admission of the partner. These are the three steps involved. So how to prepare the revaluation account? Simple format I'll show you. Look at here. This is the revaluation account. It's solved revaluation account. In simple to remember this revaluation account. This highlighted figures you remember. This is the format. In a revaluation account, on debit side of the revaluation account, you will, if increases, see in the question I said balance sheet will be given and some additional information will be given. So additional information values of the assets or liabilities is treated as new value and balance sheet values of the assets and liabilities are treated as old values. Remember children carefully in question balance sheet and additional information will be given to you. I said so balance sheet values of assets and liabilities are said to be old values and in additional information whatever the values of assets and liabilities are given those are said to be new values. Okay, so the difference between the old and new whatever is there based on that we will take those in the revaluation account. Say for example, liabilities are increased. That means liabilities, new value is more and old value is less. So the difference amount we take on the debit side. Okay, if assets are decreased, that means old value of assets are more, but new value of assets are less, then the difference amount will take on the debit side of revaluation account, decrease in the value of asset. Opposite to that, okay, if a new value of asset is more, old value is less. That means in question balance sheet asset is showing 10,000, but in the additional information he said 12,000. Okay, so that means question balance sheet value is old. Means plant, say for example, land is 10,000 showing in the balance sheet, but in additional information he said land 12,000. That means land value increased by 2,000, right? So 2,000 land increased. That means difference credit side will take up. Similarly, liabilities. Say for example, in a question balance sheet, creditors are given as creditors are given as 10,000, but he said write off 2,000 creditors in additional information. That means creditors reduced to 2,000. So liability reduced. So we'll take it on the credit side. While doing the sums, you will understand this basic whatever I highlighted here, that you remember while doing the revaluation account. While doing problems, you will understand very clearly about this. So, okay, after preparation of revaluation account, you are supposed to prepare capital accounts of the partners. Yes, hope children, you remember how to prepare partners capital accounts because we worked out final accounts of partnership forms in our previous class. Okay, partners capital accounts will open. On the partners capital accounts, the credit side of the partners capital account, we will take all those transactions which increase the partners capital balance. Means if that particular transaction is increasing the partners capital balance, we will record it on the credit side of the partners capital account. Okay, first from the question you are supposed to take balance brought down. The remaining all, whatever transactions that increases the capital balance of the partners, that we will record. On credit side, whatever the transactions decrease the balance of the partners capital account, will record on the credit side. The difference between these two is the new balance of capital balances of the partners, which will appear in the new balance sheet. After preparation of partners capital account, if any require bank account to be prepared, like a new partner is joining and he is getting capital into the business. So showing that bank balance will change now. So showing that we'll need to open a bank account. The fourth one is balance sheet. Balance sheet preparation is as usual, but remember the change here. Certain assets and liabilities get changed. Values will get changed. So with the changed values of assets and liabilities, and with the changed balance of capital balances of the partners, and by adding the new partners capital, we will prepare the balance sheet. That is called balance sheet, new balance sheet after admission of the partner. So in new balance sheet, what all changes? Cash balance will change, cash or bank balance will change, partners capital balances will change, and one more new partner will come and added, and assets and liabilities which appeared in the revaluation account with the changed values will be shown. Okay, and whatever the accumulated profits adjusted to the partners capital account will not appear. Okay, so that's about adjustments relating to the admission of a partner. And here we will do one question. Okay, I hope I'll take some 5 minutes time. Whatever I explained you orally, the same thing I'll explain you now with the help of a question. Please do, can we? Yeah, while doing question, we will understand, you will understand. I'll share a screen here. Look at here this question. Here is the question. You have this question in your notebooks. Please note down this question. Screenshot, take the screenshot of this question, all of you. See, given below is the balance sheet of A and B who are carrying on partnership business on 31st December 2019. A and B share profits and losses in the ratio of 2:1. And you have been provided a balance sheet with the liabilities and the assets. On liability side, you have bills payable, creditor, outstanding expenses, general reserve, capital balances of A and B. On asset side, you have cash in hand, cash at bank, sundry debtors, stock, plant, building, profit and loss account, right? And you also given some additional information. What he is saying about the additional information? See, C is admitted as a partner on the date of balance sheet on the following terms. What are the terms? C will be bring 1 lakh as his capital, and 60,000 as a share of goodwill for 1/4 of share in the profits. Next, plant is to be appreciated to 1,20,000 and the value of building is to be appreciated by 10%. Appreciation. Okay. And next, stock is found overvalued by 4,000. Means overvalued. Means excess value. Then showed a. Yeah, please check your screen, ma. If you're not able to see my screen, means it is problem with you. Check your video, or if you're watching the mobile, see the screen share. I hope others can able to see the screen. My video, everything on. Provision for bad debts are created 5%. Creditors unrecorded to the extent of 1,000. Pass necessary journal entries and prepare evaluation account, partners capital account, and new balance sheet after admission of C. So like this, you will get a question in the examination. This question is also from one of your previous question papers. Okay, this is a question also from one of your previous question papers. Remember, okay, I'll just going to show you how to do this. I'll repeat once again. So note, when you are reading a question, children, are you attentive? Hello. Are you attentive? Now I'm going to tell you how to identify the question, from the question, the required points to solve, give the solution, what points to be identified and noted. I'm highlighting and telling you. So please be attentive. Look at this. In this question, first he said AB partners and profit sharing ratio of AB are given. AB was given, right? Next, in the balance sheet, from the balance sheet, what are the accumulated profits? Accumulated profits means I'll tell you, like general reserve, workmen compensation fund, profit and loss account. This all comes under the accumulated profits. See, general reserve is one of the accumulated profit, and profit and loss account is another accumulated profit. Okay, so these two will come in the partner's capital account. Next, okay. Now come to the additional information. Note down. Who is partner? New partner C. What is his share? 1/4 share. What is his capital? 1 lakh. What is his share of goodwill? 60,000. Right? Now, so and what are the adjustments asked to make relating to the plant and buildings? These two values increased. Okay, so second, third, and fourth, fifth. These 5 points will appear in the revaluation account. Why? Because these 5 are related to assets and liabilities. Plant, building, stock, bad debts, creditors. These are assets and liabilities. Means adjustments relating to the assets and liabilities. So adjustments relating to the assets and liabilities will appear in the revaluation account. Okay, and the first point is relating to the new partner in order to calculate his new profit sharing ratio and to distribute the goodwill. Okay, done. Now we'll come to the solution. So first we need to find new profit sharing ratio, and we need to calculate goodwill of the new partner given to us directly. So this goodwill of the new partner has to be distributed to the old partners. I'll tell you why. Why new partner is bringing the goodwill and why that goodwill amount old partners are taking. Because in the previous slide, under the goodwill, I taught you valuation methods only. But after valuation of the goodwill, you need to find goodwill of the new partner's share of goodwill if required. Sometimes like this, he will give in the question. Whatever the new partner's share of goodwill is there, that is to be distributed among the partners, old partners, in a sacrificing ratio. Why? Yeah, see, AB are partners. and A, B sharing profits in 2:3 ratio. Happily, they are enjoying. Or I'll give you a small example. A, B friends, they have two apples. Both the apples, each of them, no, each apple they took. Suddenly, before they start eating, some C came. Then what the A, B are supposed to do? They are supposed to sacrifice some share. So by just because C has come, A, B are sacrificing some share to the C. Instead of eating a full apple, they eat some. If apple has 4 pieces, they eat 3 pieces. One piece they'll give to C. So they are making some sacrifice. But that entire tree, the two apples, to gain the two apples, A, B might have worked a lot. Okay, after because of their hard workship and their contribution, they earned those two apples. And now she just joined and asking for the share. Okay, so for sacrificing that share to the C in order to get more apples, the C has to give some contribution, some pay some compensation. He has to pay some compensation. Yeah, yeah, because all these two apples are your effort. Okay, because of your effort, you want these two apples, and I'm going to take share in your apples. So I'll pay you some compensation because you are compensating. You are losing. You are sacrificing some of the share to me. So I'll compensate that. To that extent, whatever you are sacrificing. So the compensation that is paid by the new partner to the old partners for sacrificing the share is called as goodwill. Understood? The compensation that is paid by the new partner to the old partners for sacrificing their share on admission of the new partner is called as goodwill. So how much he compensate? Whatever is decided his share, means his share of work cost, that he will compensate. Then how do old partners will take that? Whatever the share each of the partners sacrifice, that one, that ratio. Understood? So here we need to calculate that. And I told you, children, see the first method of valuation, new profit sharing ratio. If you have been given the lines like this, A and B are carrying out profits and they are sharing profit and loss 2:1. C admitted with a 1/4 share. When this information is such simple, your calculation of new profit sharing ratio is easy, and also not only that, or sacrificing ratio is going to be old ratio itself. Old ratio itself will be the sacrificing ratio. 2:1 itself, old ratio itself becomes sacrificing ratio because question has been given so simple. AB partners sharing in 2:1, C admitted with a 1/4 share. So this much simple is question. So sacrificing ratio, old ratio itself becomes sacrificing ratio. Okay, now come to the question solution. So we got sacrificing ratio. Now what we are supposed to do? We are supposed to distribute the goodwill. Whatever goodwill brought by the new partner to be distributed among the old partners. In what ratio? In sacrificing ratio. See now, distribution of goodwill. A, B sharing 2:1. C's share is 1/4. C capital is 1 lakh. C goodwill is 60,000. This is the information given in the question to us. Now C's goodwill, whatever 60,000 is there, that is to be distributed to the A and to the B in a sacrificing ratio. How do you get the sacrificing ratio? When question is simple, old ratio itself becomes sacrificing ratio. So in 2:1 ratio, distribute 40,000, this 60,000. 2:1 means 2/3, 1/3. So that is how A getting 40,000, B is getting 20,000. Now pass the journal entries. For A, for getting capital and goodwill. C is getting capital, right? C as a new partner while coming into the firm, getting capital and goodwill. So when capital is coming into business, what is coming in? Capital. In what form? In the form of cash. So cash or bank account debt are 2. Who is giving? C. How it is coming? In the form of capital and goodwill. So C is goodwill and C is capital. Okay. Now, second journal entry we will pass. What is that? For distributing this goodwill to the A and partner, A and B. So who is taking? C, A and B are taking and C is giving. So C is goodwill account debtor, A and B is capital accounts. Okay. Now come to the revaluation. This working note part is over. Working note part, we calculate, we got a sacrificing ratio, we distributed goodwill for the partners, okay, and we passed it. Now, revaluation account. What did I say? Increase of liabilities on debit side, decrease of assets also on debit side, and increase of assets and decrease of liabilities on credit side, I said, right? Just a moment. Oh, why it is not posting? Where you will be in the poster? It is there. My poster is not there. Okay, children. Yeah. So assets. Now look into the question. As per the question, what did I say? Second point to fifth point are related to assets and liabilities, which we consider their adjustments in while preparing the valuation account. So as per that, what is plant? He said plant is to be appreciated to 1,20,000. So that appreciated means increased. What is plant showing in the balance sheet? 1 lakh. What did I said? Balance sheet values are old values, right? So plant is showing 1 lakh and and additional information he said 1,20,000. That is new value, right? So what is the difference between both the values? 20,000. Now this 20,000 increased or decreased? Appreciated means increased. So in revaluation account, we take it on the credit side. Increase of assets to be taken on credit side. So plan 20,000. Similarly, if you look into the same point continuation, value of buildings to be appreciated by 10%. Here he said he is asking you to increase by 10%. So what is buildings given in the balance sheet? 1,50,000. So he's asking you to increase the value of buildings by 10%. That means upon 1,50,000, you calculate 10%, you will get 15,000. Right? So that is 15,000. Increase or decrease? Increase. Why? Because he said appreciate. So value increased is 15,000. Very good. So that 15,000 we will take again on the, here I wrote wrong 10%, no? 10%, 1,50,000, 15,000. Maybe this is some other, or this is 15,000. Okay, 15,000. Now, next point. Look into the third point. Third point, what is stock is found overvalued by 4,000. Actually, what is the stock showing in the balance sheet? 40,000. But he is saying, instead of saying to decrease, he said it is overvalued, means to excess than what actually to be. How much excess they took? 4,000. That means we are supposed to reduce stock by 4,000. Okay. So reduction, decrease in the value of asset, which side? Debit side. See here the arrow mark, decrease in assets, debit side. So stock, what is the value asked to reduce? 4,000. Right now. The next one is provision for bad and doubtful debts to be created at 5% on debtors. Yeah. What is the debtors amount? 60,000. Upon this, he's asking you to provide provision. Provision for bad and doubtful means your expected loss on the debtors. Provision for debtors means expected loss on the debtors. That means your debtors are going to decrease by 5%. So upon 60,000, you calculate 5%, how much you will get? 3,000, right? So 3,000 decrease in the debtors, we will take it on the debit side because the debtors are decreasing by 3,000. Okay, now next, fifth point. What is the fifth point? Creditors were unrecorded to the extent of 1,000. In question, creditors were showing 58,000, but he is saying it is 1,000. They forgot to record, unrecorded. Means your liability increased, right? Unrecorded means your liability increased by 1,000. So increase of liabilities on which side? Debit side. So unrecorded creditors 1,000. That's how we made a table. So what is this total revaluation account? 4,000, 3,000, 1,000. So 8,000. And this side it is 35,000. Maybe it's tallied or not on balance sheet. Tallied somewhere. We may go wrong. It is how much it is? 3,000 buildings we took. 3,000 on buildings means 5%, 10%. Depreciated. One second, children. Here it is first 3,000 now. 23,000. If I change the values, question will not get ready. 3,000 buildings appreciated in the sense 2%. 2% appreciated by 2%. You will get it. Buildings appreciated by 2%. What do you got? 1,50,000 into 2 by 100. Then 3,000. That is how it got. Okay. So now see, look into the revaluation amount. So now, as per the adjustments given, we made the adjustments in the revaluation account. Whatever the assets increased the values, whatever the decreased, and liabilities. And now the difference. So credit side total is 23,000 and debit side total is 8,000. The difference between both the sides is 15,000. So which side it is more? Credit side. That means the side which is less, that side we are supposed to show 15,000. Now, who will take this 15,000? Partners, old partners. So the difference in the revaluation account is to be distributed among the old partners. In what ratio? In old ratio. Remember, the difference in revaluation account to be distributed to the old partners only, because these are the people who's going to enjoy, because before these all are before the admission of a new partner. So new partner is no way connected with this. So old partner are going to take the difference in the revaluation account, whether it is a profit or loss. So old partners in old ratio. So 15,000 in 2 is to 3. Here the ratio is in 2 is to 1 is there now. So 2 is to 1 means 2 by 3, 1 by 3. In that ratio, if you distribute, A is getting 10,000, B is getting 5,000. Done. Revaluation account is done. Now, the next one is partners capital account. Children, are you there? Yeah. Now partners capital account. We already did about the partners capital account in our previous class. So the here also, okay. A, B, C. First, what I just said, this balance brought on from the question balance sheet. You will take so in question opposite direction. Question balance sheet it is on. It was given on left hand side. So when it comes to the capital account of the partner, right hand side. A, B, balance brought on. Which already existing. So you should write as balance brought on 1,80,000, 1,50,000. Bank for C. C came newly into the business. So for bank, we should write for C, we should write bank account. And what is the total capital he brought? Capital and goodwill together. Capital 1 lakh, goodwill 60,000. See, total cash came into business. See, C is capital, C is goodwill. Total, how much he brought into business? 1,60,000. So same 1,60,000 will show here. Now, I said accumulated profits will go to the partners capital account. See in the question balance sheet, general reserve on which side? General reserve on the left hand side, and profit and loss is on the right hand side. These two are accumulated. One is profit, one is loss. So these two we will take on the opposite sides in the partners capital account. That is general reserve on credit side, profit and loss account on debit side. Okay, and whatever the amount given in the question balance sheet, that is to be distributed to the old partners in their old ratio. Okay, the accumulated profits, whatever given in the question balance sheet, to be distributed to old partners in old ratio. Remember, only old partners, because those are the profits which are made by the partners before entering of the new partner. So they have the right to take share. That's the reason why only old partners share those accumulated profits. Okay, so general reserve from question balance sheet left hand to right hand side. Profit and loss account from question balance sheet right hand side to left hand side. Distribute the amount in the old ratio only to old partners. Next, what do we have? Revaluation account. What else comes? Until you are supposed to think what are all the things that come into the partners capital account, that all has to be taken and filled first. So from balance sheet we did. Now come to the question balance sheet. In question balance sheet over. Now revaluation account. Revaluation account, whatever the last figures are there, balancing figures. What we do, we are transferring to the partners capital. So which side it is on? Left hand side. So bring them into the right hand side. From where you are bringing these? From revaluation account, you are taking these values to the capital account. So in capital accounts of the partners, you are supposed to write revaluation account. Okay, you are getting this revaluation account. Sorry. Insert. In the okay, so from revaluation account in partners capital account, you show it on the credit side, writing revaluation account and A share and B share as usual. Now, and these two partners are getting one more, which is from working notes you are supposed to take. What is that? Goodwill. See, A and B are getting goodwill from the C. How much? A is taking 40,000 and B is taking 20,000. From where? From C. So, on in partners capital accounts, on credit side, because these are the goodwill share that they are taking from the C, and partners' capital balances are increasing. So on credit side, C's capital account, we are supposed to show, and whatever A is taking and B is taking. These are colored ones. Okay, C's capital account on credit side, whatever A and B are taking, that amounts you are supposed to show. Okay, okay, C's capital account, and now everything we have taken. And but in A is paying to C is paying to A and B. So on debit side, that means that 60,000 amount of C's capital is going to reduce. So on debit side, A and B capital you should write, and in C's capital, total he paid to A and B 60,000. You should deduct 60,000 from C. Now, after taking everything like that, so what we are supposed to take? First, you are supposed to take whatever amounts that come from the quotient balance sheet to the partners' capital accounts are to be transferred first. Then, from the working notes, whatever comes to the partners' capital accounts, that has to be transferred. Then, from revaluation account, whatever comes to the partners' capital accounts, that are to be transferred. Once everything is transferred, then you should find the difference between the debit total and credit total. Finally, you will get the closing balances of the all the three partners. And these closing balances of three partners, whatever is there, these are the amounts which are going to be appeared in the new balance sheet. Look at here on liability side, A's capital, B's capital, C's capital. So 2 lakh 30, 1 lakh 75, 1 lakh or 10 lakhs, whatever. Okay, that is what we are going to show here in the balance sheet. Now, okay, understood. Now you also, before proceeding to the balance sheet, you are supposed to prepare bank account because bank balance also changed. What is this bank balance brought on from where you got? From the question balance sheet. Look at the question balance sheet. Bank is showing 40,000. Okay, 40,000. And C brought his share of goodwill and capital, total 1 lakh 60. So bank balance increased to 2 lakhs. Okay, your bank balance changed. That has to be shown. Now balance sheet. After preparation, final one is balance sheet. And whatever the values in the question balance sheet are not changed. Okay, whichever the values not changed, those all has to be taken as it is, and whichever the values in the question balance sheet values have been changed, those are to be taken with the changed values. But the accumulated profits, whatever you are taken in the partners capital accounts, those are not to be taken. Remember, whatever the values that you have taken in partners capital accounts, not to be taken in new balance sheet. Second point, whatever the assets or liabilities that you are showed in the revaluation account, those are to be taken. Those assets and liabilities are to be taken with the changed values. Third point, whatever the items not touched anywhere has to be taken as it is in the new balance sheet. Say, for example, bills payable, we did not touch anything. So bills payable as it is will take. Outstanding expenses, not touched anything. So we take as it is. But creditors, we are taken in the revaluation account. So revaluation account, creditors, you are taken as increase of value. So to the given creditors, you should add and take them. Creditors 58,000, increased 1,000, so 59,000 you should take in the new balance sheet. Coming to the general reserve. General reserve, we should not take because you already took that under capital accounts and distributed to the partners. So will not come in the new balance sheet. Now, what else? Capitals of the partners. What balances you are supposed to take? Not these balances. The new balances from the capital accounts you are supposed to take. Same way the assets. If you look into the assets part of the question balance sheet, cash in hand not changed. So take as it is. Cash at bank changed. We prepare the capital bank account. So whatever the bank account balance showing, that will take. Debtors, yes, debtors we did an adjustment in the revaluation account. So PBD, generally what we do with the PBD, subtract, no? So from the data, subtract the PBD and show. Stock, again stock what he said, we took in the revaluation account. Which side you took? Debit side. Debit side means minus and take. Okay. So 40,000 minus 4,000. Next, plant. We took it on the credit side of the revaluation account. That means add 1 lakh plus 20,000. 1 lakh 20,000. Buildings 1 lakh 50,000. Again, buildings we have taken on revaluation account. So what is the buildings showing in the revaluation? 3,000. So that means credit side. So what you should do? You add and take 1 lakh 50 plus 3, 1 lakh 50,000. Okay. And then what is the last item? Profit and loss account. Do we take profit and loss account in new balance sheet? No, because this balance we already adjusted to partners, so will not come. Done. Everything has been taken. So now your balance sheet will get tallied. Where is this? This one. Okay. That's how you are supposed to do. In tomorrow's class, we do one problem. Now I explained you, showing the solved question I explained you. Tomorrow we take one problem and we work out in the class. Done? Okay, children? I think you all understood. And tomorrow, without fail, all of you, please join the class and be ready with your notebook, pen, calculators. Is that okay? And I'm also telling you the question number. I'll just show you. In tomorrow's class, which question to carry? Not this. I'll tell you. Page number 163, question number 2. Please be ready with this question. Okay. Notebook, pen and calculators. Page number 163, question number 2. We are going to solve tomorrow's class. Still, do you have any doubts? You can unmute your mic. And just 2 minutes, children. I have time. Another class. Who is asking that after completing the entire question, is it the retirement problem? Okay. Anyone? Do you have any doubts? You can unmute and you can ask.
Ma'am.
Yes.
Ma'am, ఈరోజు PDF link, ma'am.
PDF. What PDF I shared? PPTs.
Yes, ma'am.
స్క్రీన్ షేర్ చేయండి మ్యామ్, లేకపోతే స్క్రీన్ షాట్ తీసుకుంటాం.
Second. Short answers also there.
మ్యామ్ లాస్ట్ క్లాస్ లో చెప్పిన సమ్ లింక్ కూడా పంపించరా మేడం?
Sorry, ma, that one is not. I didn't keep open now, so it's difficult for me to go back that. and also I'm getting time for my next class. You can get it from your friends. And today is the last topic of tomorrow. After we complete this sum, I'll share today's this last one Word document. Okay. So I shared all the three. You can go through. Yeah. Okay. Yes. Thank you, children. Thank you for being here. We'll make tomorrow. We'll be ready with your material.
Thank you, ma'am.
మ్యామ్ షేర్ చేస్తారా పీపీటీ రోజుది? ఎక్కడ చూసినారు లింక్? You can